Hello everyone, good afternoon and welcome to today's Trading the US Open live here with the Live Trade Room. Now today is Monday the 8th of October, and to just fill you in terms of our approach, we're technical traders and what we look to do is to identify high probability trading opportunities that we can execute during the session ahead of us. Now we do have an approach which allows us to identify trades, but then look to execute and manage those trades with a certain degree of consistency in terms of our approach. We've got a very methodological approach, and we've also looked to trade these markets with a high degree of discipline, something that we think is very important for traders when they're trading these markets, to know and understand how to protect their own capital. All with one view, and that's to look to book in profit on a consistent basis on over the medium and longer term. So seeing that P&L grow, like I said, over the weeks and months ahead. So without further ado then, if we can look to I'll turn to our risk warning, should I say, and just please do familiarize yourselves with the risks involved in trading these financial markets. Okay, so the next thing now is that it's very important for traders when they sit down in front of their trading screen to at least have a basic understanding of the news flow that can impact our trades. Now this won't take us very long today because we've actually got a bank holiday in Japan, Canada and the US, so the markets are going to be a lot lighter than normal, and that presents some additional market conditions for us to bear in mind. As you can see, as far as the news flow is concerned, not an awful lot for us to contend with. In fact, there's nothing as things are currently presented on screen. Now we do have macro events which can impact these markets. We can have ongoing discussions regarding the Brexit situation, which can impact the euro and the pound. The dollar can be influenced and impacted along with the US equities with regards to talk about global trade wars with China. And there's geopolitical concerns within Europe as well, and the fiscal position of Italy. So there's a lot of headwinds, sanctions on Iran, and the impact that could have on the oil market. So there's lots of geopolitical events that could impact these trades and the markets that we look to trade. So that's just a brief sort of word really on our some of the markets that we've been looking at. And I do want to draw your attention actually to the markets that we have currently up on screen. So the fact that it's bank holiday in some of the major economies in the world is a little bit of a concern, just purely on the basis of lighter market conditions. Now the reasons why that's important to note is effectively what we've seen today is we're looking to sell literally all these 8 markets currently up on screen. So we're looking to sell the euro dollar, the Aussie dollar. We're looking for opportunities to sell that, all at slightly different levels. We're looking to sell the pound dollar. Let me see, and we're also looking to sell the pound yen. In addition to that, we're looking to sell the gold market to the downside. The oil market to the downside, we've just made reference to it, and US oil. I'll just zoom out a little bit so you can see this market. And the reason why I'm just identifying each of these markets is you can see the price action. Now we've just had a really strong explosive move to the downside. Now this market has been doing that on a number of occasions. And these are the choppy conditions in which we need to understand. Now, we've had this explosive move to the downside. We were looking to sell this market on an intraday basis, and we were stopped out just above the 111.94. You can see prices were reluctant to go much further than that, but effectively the whole market kind of went sideways for a long period. And now that the US session has hit the fan, all those traders have arrived, even though it's a bank holiday in the US. So there's still an influx of capital potentially, but perhaps they're using that as a reason to push price. And what you're prone to during lighter market conditions is this kind of market, this kind of price action, which is sideways moving followed by strong impulsive moves, whether that's to the upside or to the downside. And even after all this period of consolidation, it still broke above that 1194.45 level before reversing to the downside, and a really strong move lower as we're looking at the gold market. So we are currently in this on the daily time frame, so we'll continue to be in this market. But it just shows you the kind of the choppy nature of this recent price action, followed by really strong explosive moves lower. The oil market has moved sideways since this morning. We had a kind of initial break to the downside and then pull back, and then it's effectively moved sideways. The S&P, as you can see, we were looking to get in below these levels. We had a fairly strong pullback, and the market continued to move sideways before we saw this next leg to the downside. So we're actually, we took two small trades in this market already this morning, just above the 28.84, and we got stopped out on those two trades off the back of this move to the downside. We're in profit for a little bit, and then we had a really strong pullback, and there's not really an awful lot you can do with these types of trades that explode to the down, or should I say, give us the directional bias to the downside and just reverse without creating structural failures, which is what we ordinarily look for. So under situations like that, we're disciplined with our capital. We draw a line in the sand. We make sure that if price breaks above a certain price, that we're no longer in that trade. And we've had another attempt lower, which has structurally failed again, and it's just pulling back into these levels now as we speak. So it just remains to be seen whether we will start to see some continuation to the downside in the S&P. So just sideways moving market conditions across the board. I suppose the only caveat to that in the last 10 minutes has been in the gold market. You can see it flushing lower at a significant pace. So we do like these markets lower. I'll just remove that level there. As far as the rest of the markets is concerned, we're currently still in profit on the UK 100 market. We're currently below our entry level. We do want it to see if this market can extend below this recent low here earlier this morning, 72.68. So we still have our stop loss just considerably out of the way, because what our plan was with these markets is to get into them and see if we can ride a bit of the price action, and see if we can get this continued move lower. So the problem we have with this move, it's not really in character with let's say the euro dollar, for example, which would be a good indicator of dollar strength. So it is a dollar strength move effectively, but it's not really in keeping with, maybe this is slowly catching up maybe with some of the other markets, but that creates a bit of indecision in our minds when we look at this kind of price action. So these are markets just to be a little bit more careful with. We're going to try and run these to the downside with the S&P 500 and also to the FTSE market. So no real change is necessary as of yet. And it might be the only markets that we'll look to get into. Now again, at the very minimum, we'd want to consider pullbacks, and that would actually mean this market pulling back to the 1193 level. That might be a tough ask now that we're at the 1190 level. We're $3 lower, but this is a 1 minute time frame, and if I zoom out, you can see that you can get literally sort of 5 minutes of really strong movement to the downside on a number of occasions. It doesn't last very long before the market sort of procrastinates and just moves sideways, as you can see from here, and then you just get another 2 or 3 minutes of these moves, which is, it's conducive for breakout trading, but as you can see, it's quite, this is a particularly long one, but quite difficult to capture, especially when you have these lows. So getting the right type of, so you could look at taking these trades. I mean, obviously some of these are during the Asian session where we had a nice, really strong move to the downside, and we got some continuation at the beginning of the European session, and now the same again for the dollar session. So it just shows you the importance of the open, potentially the close of one market and the open of another market, where you get an influx of traders and ideas and potential trades coming into these markets. But unfortunately for the remainder of the session, it's kind of drifted sideways. So that's obviously the market conditions. The overall momentum is, as you can see, to the downside, which is why we're looking to sell it. But we have to take on board these long periods of consolidation. And that would be the case for all traders trading these markets. So not as easy and as straightforward as it currently appears. And now that is a really strong move in a relatively short period of time. So really we want to see a constructive pullback to get into it, because at these prices now, the price is far too, it's moved considerably away from our entry price. So we may very well get eventually all 8 of these markets moving in the direction in which we want them to move. I suppose the question becomes, are they tradable? Are they trades that we can trade consistently with a high degree of certainty or not? Because at the moment the answer to that question is not necessarily. So it does create. Now we will be announcing our pro scalping trading sessions, which will be coming soon, which would be a lot more conducive for certain moves like these. What we're currently doing is looking for entries on daily time frames that we can look to let those winners run. But when you get long periods of consolidation and really choppy market conditions, we know that that's not necessarily conducive to our approach. But what we don't want to do is to be chopping and changing our approach. We know that when there's free-flowing markets that give us direction, as you can see from many of our trades over the last few weeks, that those trades have become a little bit more frequent than they were probably during the month of September. Particularly difficult month to trade, but when we do get those opportunities, we're able to sort of benefit accordingly. So again, it's just exercising a little bit of patience and see if we can capitalize on those moves to the downside. So hopefully we'll get continuation in the FTSE market below the 72.68. We're getting quite close to that level now. So let's zoom into the FTSE 100 just here at the bottom. And see if we take out those lows. At which point we can take risk off the table completely in this trade and look to let it run and see if we can capitalize on a kind of a 2-to-1 profit risk reward in this trade. Do feel free to post into your chat box if you do have any questions, or if perhaps you have some trades that you happen to be looking closely at. Do let me know what it is you're trading. Be interested to see how you're getting on with your trades. We have, this morning, as you can see, we normally have sort of slightly smaller a trade plan. We're looking at sort of 8 trades at the same time. Normally it'd be 3, 4, maybe 5 trades. So that is good because all of these markets stack up for us on a daily time frame, on much bigger time frames. So we're quite happy to see continuation in these markets. But let's see if we get the price action that can back it up, because that is the all important question. Will we see the US equities continue lower? We're very likely to, but we'll have to wait and see. The same situation for the FTSE. In fact, we're likely to see all these markets continue lower. It's just getting that timing right, and the fact that it's slightly lighter markets means that these markets could be prone to a little bit more manipulation, which can work for you or against you depending on the trades that you happen to be in. So it's just a little bit more difficult, but you can reduce your risk. You can look to be a bit more aggressive with your trade management and remove risk sooner rather than later. All of those things will help you. So with the S&P 500, for example, if we get a break below the low of the 2878, we'd probably look to take the risk off the table with this trade. Same situation here, just marginally below the 7268. We're only a couple of pips below that level now, or above it. So if we get a break below, then we'll take that risk off that table, and that becomes a no-risk trade with the potential to see some further downside movement on that market. The Aussie's really struggling to break beneath last week's low, which is a 70.42. It's a shame with the gold market because we were already selling this market, but we sold it before this market got into a lot of this sideways moving price action. So it's been pretty boring since we've got this little break lower. And we're seeing the same again, although this is extended, this is further extended to the downside. So it just shows you that this market really does want to be pushing lower. And hopefully we'll get the next flush to the downside in the FTSE and the the S&P. Let's see if it's going to push lower for us or not. Let me show you the trade. The reason why this is such a kind of a strong move is that we've had a little breakout of this sort of consolidation up at these levels. So a break below the 1197, and our entry is just below that level on a daily time frame. We got into this last week once we bounced off this level, created a double top above the 1208, and this market has attempted to push lower on a few occasions and has failed, and the same to the upside to an even more important extent. And it was just a matter of time before we got this explosive move lower. Now we've tried to sell it around this level once already, so it was very close to being a really good sound trade, but the price action hasn't been as user friendly as it could have been. So we still expect this market to continue lower, with the potential for further movement down to the 1180 level. So there's still a way for this market to travel. So I'll just convert this to a 5-minute chart like the other foreign exchange pairs. So we do want the FTSE bottom right hand corner to just extend lower below the 72.68 level. Very solid gold move now. Okay, now we're beginning. As soon as I said, it's just tucked back inside, but we're just beginning to get a little bit of a break to the downside. A little bit of a close below that 72.68. That's what we would like to see, and it's just tucked back above it. That's not to say we won't get continuation. We're likely to do, but this is the move that we're looking to get involved in. It's got plenty more scope to the downside. Excuse me. Potential resistance around these lower levels in here, so we do need to be mindful, maybe around the 72.50 level. So it's got a little bit to go. So maybe kind of a 2-to-1 win in this market might be achievable. So now we're getting a little bit of the move that we'd like to see. In terms of other opportunities, gold market is the best one. The gold and the FTSE. The rest, unfortunately, are not giving us that much to work with. Not overly surprising, just to draw your attention to the fact that it's a bank holiday in Japan, Canada, and in America. So observance of Columbus Day, Thanksgiving Day in Canada, and Japan, Health Sports Day in Japan. So interesting. So that's effectively and how these bank holidays would impact. Obviously, the environments would be there'd be less volume, less tradable volume, less traders working today. So as a result, the markets are open to a little bit more manipulation, which is probably what this move represents. Obviously, some of the big boys looking to get into this market early and just really drive the price lower. And there's very little resistance, as you can see. It just keeps ticking lower. So let's just see if we get a bit of a close below this level here. Hopefully we'll get a nice extended move below this level, and then we can mitigate risk and manage that trade effectively. So we need to see this market close below the 72.68. It's still procrastinating with that low in there. So we're getting the move that we're looking for in the FTSE 100 below the 72.64 level. We could be close to this market closing now pretty shortly, in just a few seconds time. It's interesting to note that there's not much really going on in the dollar pound. Potentially it's bearish, and that can often, if the pound strengthens, the FTSE often sells off, and vice versa. If the pound dollar weakens, you often actually get a bit of strength coming in to the FTSE market. But clearly today there is concern with regards the equity within the equity space. So as a result, I think deciding to sell the equities is probably a slightly better call than selling the pound dollar. Of course, that is very much as things stands. So now we've got this close below this level. So from a consistency perspective, we don't need to expose that capital now. We very much had a significant exposure. Let me just work out what that level should be. So there's 72.84. So there's 72.84 is the high. So 72.85 and a half. So 72.86. So we just have our it's exactly at the same level actually. In fact, I will bring it down just a touch. Just falls into line just behind that level. Okay. So there you can see the actual price in there. So we're actually booking in a little bit of a profit. This is a profitable exit now, just above this high. So now we've got that follow through. And us just trying to be as consistent as we can when these structures are created. We're looking to sell and go with the downtrend, and we're in that particular phase right now. We've got the next extension lower, so then we can use the most recent high. And in this case, there is no exposure in this market. So to the downside, we're covered. To the downside in terms of our exposure, we're covered for now. But what we're now focusing on is how much profit we can generate off this trade. So we don't have any psychological concern with taking a loss on this market. Same situation for the S&P 500. If we get a break below the 2878 level, we need a flush lower, of course. Then we can look to probably take risk off the table completely on that trade, and get yourself into a position where you're risk-free very early on. And then you can focus on taking profits. So a structural failure here in the pound dollar, and if this market flushes higher it's likely to push the FTSE even lower, so that would bode quite well for us. Just to let you know, guys, for this particular session, we'll be packing up in about 5 minutes. We will be switching across to the live trade room. So if you are interested in joining us, just to let you know, we're currently offering a 14-day free trial to come and join us join us for over 76 live trade rooms per calendar month. So there's lots of opportunities. We also trade daily time frames at 9 o'clock every evening. So those of you that obviously are committed during the day can join us in the evening as well, and trade the markets for just 30 minutes a day, and we'll show you how to do that consistently. So that might be useful to some of you. But if you do decide to join us and you take us up on a 14-day free trial and you want to stay on, then it's just $9.99 per calendar month. It's just a small contribution towards your access. That's really all we're asking for. And we are sure you'll find that incredible value. So no strings, no obligation, no contract, no nothing. It's just it is what it says on the tin. So hopefully you will find that to be a very useful. And there's education as well available for you, so you can get a really comprehensive education and trade in these markets. And of course, we trade the markets live with capital every day, so you can see all of our winning trades, all of our losing trades. It's all there for you, so do bear that in mind. Hopefully we're just getting a little bit of a follow through now in the S&P 500, so hopefully we'll get a little bit of a squeeze lower in both of these markets. We just had to be very patient with them. So we'll just continue to let these just roll out for a few more minutes. Okay, sorry about that, guys. So we're in a couple of hopefully potentially positive trades to the downside. That being the FTSE 100, and which we've taken risk off the table, and also potentially a small trade in the S&P 500 below the 2878 level. So if we get a break below that, we'll be taking risk off the table completely, and let's see if we can get a nice flush to the downside. There's plenty of scope in both of these markets to continue lower. As you can see, we could push right the way down to Friday's low, the 2868. So that's there's a little bit more for this market to go. Maybe the US Open. It's bank holiday today, isn't it? So we're going to have lighter market conditions. So maybe that's one that we just look to see if we just get this little move lower. We also have the FTSE 100, and we're quite happy to see this market extending lower, and hopefully take profit at some lower levels. We've just got potentially a little bit more to go. We could squeeze down to the 72.50, maybe look to take profit perhaps around that kind of area. And we're always looking to take more profit when we win than when we lose, so that way you're just getting your risk reward ratios right. And like I've said quite a few times, we're still likely to get downward movement in all of these markets. It's actually what's been setting up, and that's likely to continue. It's just they may be a little bit more difficult to trade today due to the lack of now we're getting that move in the oil markets pushing lower once more. So we'll stick with these trades for now, guys, and I do appreciate it. It's 1:47 UK time, so we're going to switch across now to the live trade room. Hopefully you've had an opportunity to see our description below, and if you'd like to join us, click on the link and you get instant access. So we'll switch across now to the live trade room, guys. Thank you very much for joining us. Please do give us a thumbs up in this video, or subscribe to our channel if you can, and you'll be notified when we go live if you click the bell function. And also you can join us through Facebook, Instagram, Twitter and LinkedIn. The details are all there up on screen. So thank you very much for joining us. Do take care. We're switching over to the live trade room now. We'll speak to you soon. From everyone here, take care. Bye for now.